Welcome back to the channel. This is a chart of the S&P 500 SPY ETF. Today we're going to be going through a technical analysis of a newly emerging price channel, the resistance we're likely to encounter, and entry and exit points in this new setup. Stay tuned as we analyze the S&P 500, including daily, weekly, monthly, and long-term trends. If technical analysis and momentum trading is of interest to you, be sure to like this video and subscribe below. Also, do you think we're set up for a breakout today of a wedge pattern? Are we going to be hitting a top soon? What are your buying opportunities? Leave your thoughts in the comment section below. If you've been following this channel, as we mentioned in our previous S&P 500 analysis, for the last year we've followed a price channel that's led to a 46% increase in the S&P 500 since April of last year. However, as of recently, we've seen a divergence from this channel as we broke below the lower support on March 4th. At this time, we weren't sure if this would lead to a larger pullback, find support and stabilize, or bounce higher. As we've had a few more days to watch the markets unfold, we're seeing how this is likely pivoting into a new price channel supported by the long-term bull market trend line of resistance that has been playing out for over 10 years now. If we zoom back, we'll see that the S&P 500 has never broken this line of resistance in the past 10 years. In mid-February, we hit this line of resistance for the first time in 3 years, leading to the current selling pressure that has resulted in a 5% pullback. We're now seeing a new trend emerging, which is a price channel that's bounded by the long-term line above and a line of resistance that's set below here that follows this same price channel. This is a change in the previous price channel, which had a different velocity, but we're still seeing a bullish upward trend, but we're likely to see a lower rate of return. This lower price channel is supported by lows in December, in January, and March of this past year. This lines up nicely to that longer trend of a bull market that we established before. Looking closer at this trend since February 16th, we have a wedge pattern formed by the intraday highs established, including the high yesterday that respected this line. We are seeing a breakout of this wedge occurring today, where it opened slightly below the line, broke above, and it may backtest. From today's current market, we've got less than 1% before we hit that long-term price channel again. There could be a chance that this breaks out of this channel, but given this long-term trend, I feel that the odds are more likely that we'll be hitting off of this line and going back down to that lower level of support in this price channel. Personally, I'm waiting for a drawdown in the coming days or weeks to buy in. I'll be looking for support of this trend line here and buying in hopefully around 373, approximately a 4.5% decrease from today's open. Between the upper and lower components of this price channel, we've got about 5.5% that we're looking at. And looking back historically, we can see that we have a very similar price channel that did emerge back in 2014, leading into 2015. This channel was very similar, with the upper support being that long-term trend line and the lower trend line and channel being approximately 5% from this long-term trend line. And then this was divided into an upper and lower channel, which may emerge as we see in our new setup. This is certainly an interesting time for the S&P 500 as we see this shift from this price channel that we've been following for the last year. And this may bode well for continued bull trends, however, unlikely to be those trends that we saw emerge over the last year. Certainly keep this in mind as you plan out your considerations for equities in the S&P 500 and others. interested in hearing more about this, seeing how this trend unfolds, certainly stay tuned as we'll keep an eye on this and hit that subscribe button below.